Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello subscribers, welcome to the Fast Profits Daily. I am Brijesh Bhatia. In this video, I'll be discussing three companies, TCS, Tech Mahindra and Tata Motors, which can rally or probably are setting up a rally and have a good relation or a market trend relation with the European markets. Well, US markets have been coming back very strongly since last few days. India being trending in a range. We have seen Nifty been consolidating between 17,700, 18,300 on the upside. So that has been a range in the Indian markets. Most of the markets have been coming back very well. In case if you have seen my Sunday where markets kya lagta hai, I have discussed the global markets picture. What are the charts of European markets indicating, what are charts of Indian markets indicating, what are charts of US markets indicating. China is coming back very strongly, and all these charts indicate that yes, we are into a bullish trend, and probably we may see this as a time correction into the Indian markets. But this video is not about what are the trend into the markets, but looking at the European markets, which is trending at 52-week highs. It indicates that these stocks may see a rally. Why these three stocks? Well, there are a number of stocks which have a business or exports into the European markets. But if I just look at these three companies, TCS, Tech Mahindra and Tata Motors, and if I just look at the revenue number, probably if I look at the TCS have around 32%, 31.88 precisely. This is FY21 number, and the revenue comes from the European market, which is around 32%. Tech Mahindra, which is around 26.2% from the European market, and this number is for FY22. Tata Motors, again, as I said, we have seen a JLR number big, and 24% comes from the European markets, and this is again a FY 122 numbers, sorry, FY 22 numbers. So yes, if I just look at these three companies, and being a larger or the large cap into the Indian markets, I have considered these three stocks, and there is one sector as well which I'll be discussing at the end of this video. So keep watch, which will be again a beneficial when the US market or the European markets are trending higher. So let's start with the first chart of the European market, which is FTSE 100, or it is sent as UK 100. It's the equity index for the United Kingdom. And if I just look at, it's been trending at 52-week high, and this is the one index which is leading the European markets towards the highs. If I just look at, this is a monthly chart. If I just look at on the screen, if you look at the screen, and right from around 2018, we have seen a trend line breakout. If you look at this blue trend line breakout, it is 55 months old trend line. And why I'm emphasizing on 55 is because 55 is a Fibonacci number, and when the fifth time cycle conforms with the breakout is very stronger. It gives a more conviction to these breakouts. So with the time cycle, the trend line breakout indicates that yes, this is a start for the UK index, and we may see much higher prices coming onto this index. And this is just a start, I would say. And even if you look at the last probably start of 2022, or say after the first quarter of 2022, this index has been consolidating in a narrow range. If you look at this is monthly chart, as I said, it was consolidating between 7,500 to 6,600, 6,700 onto the downside, and again a consolidation breakout is also visible into this index. So with the price breakout on the or the trend line breakout, with the whip time breakout, with the consolidation breakout, I think this index is getting ready for a bigger up move. And not only this, even Germans are following this UK index now. And if I just look at second chart, the DAX, and this is a weekly chart, this is a German index, and if I just look at, we have seen a breakout of the previous double highs, which were somewhere around 14,700, 750 levels, and now index is breaking above this on a weekly scale as well. So if you look at the last week, a bigger rally followed by this week a bullish candle, our bullish rally coming in, which means that the follow-up buying is still there into the DAX. And most importantly, if we look at this orange line, 200 exponential moving average, the prices or the index is trending above this 200 weekly exponential, and the breakout above this confirms that yes, the strength in the trend, bullish trend, is very much there, and index may follow the UK onto the bullish side. Second, if I just look at the top down approach onto the same DAX chart and move on to the daily from the weekly, with the breakout, now we are witnessing a golden cross. So basically, golden cross is when your 50 days crosses above the 200 days. So blue line is my 50 days exponential moving average, orange line is my 200 days exponential moving average. So now if we look at, we have seen a positive crossover, which is the blue is going above my 200, which is again a golden cross onto the DAX daily. So with the weekly breaking out with the previous highs being resistance zone, reversing from 200, the daily indicating a golden cross, which means that the top down over from long to medium term both are trending onto the bullish scenario over here. And if I just look at the structure, yes, the strength is there. After a breakout, there was a retest at 250 both. With the golden cross now, the momentum is heading northwards, which means that yes, the trend is very stronger. If I just move the third, which is the known index, which is CAC 40, the 40 stocks index. And if you look at over here again, multiple breakout what we saw on the DAX. This is again a weekly scale chart. And if you look at the weekly chart over here, the previous resistance somewhere around 6830, 6840 being surpassed, prices turning back above from the 200 weekly exponential moving average. If you look at the orange line, and the recent dip was again a 50 weekly exponential moving average, which means that here the trend is very bullish. The momentum seems onto the bullish side from the retest of 200 exponential moving average, again a sign of bullish structure over here. So all the three indices, which is largely followed with the European FTSE or the FTSE 100, which is the UK markets, DAX, German markets, and CAC, again all these three indices are indicating a bullish scenario for the European markets. Now the European market trending bullish, definitely it is giving a boost to the economic, and again there could be a positive for the exporting companies from India. And when, as I said, Tech Mahindra hold around 26% weights, or the 26% revenue from the European markets. TCS somewhere 32% revenue, Tata Motors somewhere 23.5%, 24% revenue from these markets. Again, if they the country boost, we may see a bullish scenario. So let's look at how this stock price move when the European markets trend to move bullish or bearish. So the next chart, which is very important, look at the screen over here. The first is the FTSE, I would say FTSE 100, which is the UK market, comparing it with the move of TCS, Tech Mahindra, and Tata Motors. So the blue line which you see is the FTSE 100 price action. The orange line, if you see, the dark orange line is TCS. The green is the Tata Motors, and the yellowish or the light orange, I would say, is the Tech Mahindra. So now if you look at the trend over here, whenever the CAC, whenever the FTSE dips, there is a dip into the price action of these stocks. When they trend to head higher, which is the bullish scenario, again there could be a relation with the Indian markets as well. I'm not saying that they are the 100% correlation between the FTSE and the stocks. But if you look at the trend, generally this is a weekly chart, so trend may build slow and steady. And if you look at the current scenario where the trend is going higher, we have seen all these stocks following the trend of FTSE. So even if you look at, right, this chart is from 2017, mid 17, and if you look at the scenario, there can be a deviation of where at some point in time these stocks may be outperforming against the FTSE, or FTSE may be outperforming against the these stocks, and that will 100% depend on to the Indian markets as well. But the current scenario, if I just look at the long-term scale, they generally go hand in hand, or there could be not a 100% correlation, but yes, 35 to 40% correlation is still there. And when the FTSE is breaking out, FTSE 100 is breaking out, there is a chances that these stocks may catch up with the FTSE onto the bullish side. So what are these charts indicating? And if we start with the TCS and Tech Mahindra, both into the tech business, and generally they tend to trend with the Nasdaq, which is again IT index of US. So let's first look at the US. I'm not looking into the deep or not going into the deep analysis of this Nasdaq. And if I just look at the structure over here, there is a Wyckoff theory. And if you remember, I have done a video a few months back as well onto the Wyckoff theory of the IT index. And I've highlighted the similar structure, and this is an updated chart over here. So in case you want to get detailed into this structure, you can watch that video as well. Again, coming back over here, if I just look at the extreme right hand side, we have been seen Nasdaq holding the previous swing lows. The reversal is very, very faster. So as per the theory, if you look at the LPS marked 1 and 2, LPS is basically last point of support onto the chart as per the Wyckoff theory. So the LPS 1 and LPS 2 were nearly the same levels, where the spring lows, the all-time low or the 52-week low, I would say, not the all-time low, was held very, very strongly over here, and the prices are now turning onto the bullish side, which may again boost onto the IT stocks onto the positive side. Keep a watch on this. Though there has been a huge volatility into the US IT stocks as well, but the recent scenario may see an uptick into the IT stocks, which is TCS and Tech Mahindra, which we are discussing in this video. And if I move on to the TCS over here, the similar structure, the Wyckoff theory, if you look at the orange lines, the Wyckoff theory highlights over here, we have seen a spring and the structure is bullish. The similar two lows, which is LPS 1 and LPS 2, are indicating, yes, the structure seems very, very bullish onto the TCS as well. Tech Mahindra, the next chart, prices are consolidating in a weekly scale, which is the blue line, if you the green line, which is the 50 weekly exponential moving average, and the orange, which is 200 weekly exponential. So prices are trending in the narrow range over here. I'll wait for either side breakout before taking an trade or investments into the Tech Mahindra. So let this consolidation move break out, and then there could be a possibility where the bullish or bearish trend may emerge. But as of now, it seems that the structure is into a narrow range. Considering the FTSE, we may probably see a breakout coming onto the higher side. But as of now, it seems the stock is consolidating in a range of 50 weekly and 200 weekly over here. Tata Motors, interestingly, look at the rally post pandemic. We have seen a consolidation, and there was a rally in the last quarter of 2021. Since that, the stock is consolidating. So if you look at this blue line over here, the stock is taking support over there at around 350, 360, but largely it is been consolidating in a triangle structure, the black lines, if you look at. Interestingly, the prices are trending around or hovering around 50 weekly exponential, and the slope of 200, which is the orange line, is trending bullish. Again, a sign of a bullish scenario over here onto the weekly scale. So again, as I said, Tech Mahindra is trending into the range of 50 weekly exponential and 200 weekly exponential. Tata Motors is trending into a triangle structure and indicating a range bound scenario. So I'll wait for a breakout on both the stocks before. There are chances, or the views are inclined or biased towards the bullish side, because FTSE is trending higher, and we have seen a fresh breakout coming into the FTSE. So sooner or later, in case when we see this bullish breakout coming, you can look for an opportunity in these two stocks. But as of now, yes, I'll have to wait for a clear trend emerging into Tech Mahindra as well as Tata Motors. Well, one sector where these European markets could help out is the textiles. So there are few companies, I would say, which are into the textile business and exports to the European markets. We have the likes of KPR Mills, we have like of Himmat Singh, PDS International, Gokuldas Exports, Welspun, Trident, there is Jindal Worldwide. And these are the few textile stocks which you should keep on your radar. We have seen this textile stock rallying in the last few months. They have been into the consolidation zone as of now. But yes, if the European markets economic comes back on track, we may see these textile stocks as an investment avenue, may see a huge upside. So keep on this sector where the stocks which I have discussed have a revenue from the European markets as well. They export to the European market. So there are chances that when these stocks rally, when the European market rally, these stocks may see an order coming on from the or order size increasing from the European markets with the economy coming back very, very strongly, and these stocks may see a huge upside. So keep a watch on this sector. Apart from this three stock, TCS, Tata Motors, and Tech Mahindra, which I have discussed in the video, textile sector seems an interesting investment avenue, considering the European markets may see an uptick or continue to see a huge rally coming into the European market. And I won't be surprised, and which I have said in my market kya lagta hai video as well, that there could be a decoupling happening into the European markets and US market, which we have seen in India against the euro, against the US in 2022. That could be happening in 2023 against the European markets and the US markets. So keep a watch on these three stocks plus a sector which I have discussed, and there when the opportunity emerges, you can look for an investment avenues. Signing off, Brijesh Bhatia.